Good afternoon, everyone. Thank you very much for joining our afternoon session. My name is Ray Chan. I'm the moderator for the panel today. The discussion this afternoon is very interesting. We have a panel on AI, and our discussion this afternoon is on blockchain. As many of you know, blockchain is incredibly popular nowadays. So our session will focus on what blockchain is, how do blockchain work for us, and what problem can they solve, and how blockchain can be used. So I will start with a brief introduction about what blockchain is, and then I will throw an overview question to my panel. So our understanding to many of us, what blockchain is like its name indicates, blockchain is a chain of blocks that contain information. The technique was originally described in 1991 by a group of researchers and was originally intended to timestamp digital documents so that it is not possible to backdate them or tamper with them. However, it went by mostly unused until it was adapted by Satoshi Nakamoto in 2009 to create Bitcoin. A Bitcoin is a distributed ledger that is completely open to anyone. So this is the background of what blockchain is, and then I will ask my audience to give their opinion of what blockchain has developed and what do they see in the past 12 months. May I start with any of my panel want to jump in? Angelina?
Hi, Angelina Kwan. I think blockchain is here to stay. It used to be, as I talk about this whole phenomenon about Bitcoin and things like that, I think it used to be snake oil, but now the snake oil has become medicine. And blockchain, distributed ledger, Bitcoin, and all these cryptocurrencies are the wave of the future, and will slowly be accepted and will slowly move as the way to go going forward. That's my personal view, and not the views of my company. But I think that is the way to go.
Thank you. Douglas?
I think when we're looking at blockchain, it's actually important to look at a number of different pieces. For me, I think of blockchain as basically a combination of technologies: DLT, distributed ledger technology, cryptography, and smart contracts combined in different ways to produce different results. If we think of cryptocurrencies like Bitcoin are one particular type of blockchain application. If we think of another area that's getting a lot of attention right now, ICOs, initial coin offerings, that is another application of blockchain. ICOs are effectively blockchain combined with crowdfunding. And I think when we look at most of what is happening today, there's a whole lot of noise around cryptocurrencies, ICOs, and in particular, open permissionless systems. And I think much of the real action and the future transformational development is primarily in the closed or permission systems developed between smaller groups to deal with particular problems.
Yeah, I would agree with that for sure. I think in the last year there's been a real sort of divergence, if you will, from the cryptocurrency open systems and the enterprise DLT solutions, financial blockchain, if you will. And they're really starting to build different solutions. They all may have came from the same beginnings, but they're actually forming quite different technologies. And I think the maturity level of the enterprise and the DLT side, looking at sort of bank applications, et cetera, isn't as advanced as in the public area. You know, Bitcoin's been around for a long time. It's quite stable, et cetera. Whereas we're not yet seeing the adoption of the private and permission systems. I think people are a little confused by that. They're saying there's all this noise, where's my production system? But I think because we've had to sort of re-engineer the underlying systems to allow for private networks to exist, to allow for permissions to exist, you know, I don't want to trade with an anonymous counterparty. That's not the use case, right? I need to know who they are, that's fine, that's good. So we need to now sort of change the technology a bit to meet that use case. And I think that's what we're seeing now is development on both these sort of two sides of the same coin.
Sure. Paul?
Yep, I hold a similar view. To me, blockchain can be defined as a secure, real-time, B2B data synchronization platform. So most of our projects are actually around permission blockchains rather than public open permissionless with crypto asset generated. And we see a lot of potential of using this technology to facilitate collaboration cross-border and cross-industry. So we see some collaboration before which is not possible when customer information is involved, and you need to transfer them offshore to a lot of jurisdictional regulator. This is something they never permit. But now with blockchain, is now being more feasible. So we see a lot of development coming up very soon in the coming year.
Lawrence?
Yeah, it's interesting. The first application of blockchain is really Bitcoin, which started in 2009. It's been almost 9 years. But if you look at other kind of public blockchain adoption, that's not, besides Bitcoin ICO, you don't see that many. Whereas I think a lot of interest recently are on the enterprise, so-called permission blockchain. Actually, I think eventually, I think this whole technology will probably affect any kind of business. If we have a business process that involve a lot of different stakeholders, they're not necessarily trust each other. Right now, they need to share a lot of information because they're transacting with each other. But now they are not. I mean, because they have their own database, so that a lot of time they don't see the same. They should be seeing the same fact at the same time, but they don't. And because of that, there are a lot of resources, error, are spent on to just reconcile the errors. And blockchain or DLT, supposedly we'll be able to solve this problem. I think that's why I think any kind of business process that when you have this kind of, but it's also true that blockchain is not for every kind of application. If your application only involves one party, probably blockchain is not the one because it's not efficient. But the fact that you have something that involves a lot of people, blockchain, but also the other thing I want to, from one of the panel speakers says that I think one of the reasons we could be holding back some of the application is the privacy issue. Is that even if you are using a permission blockchain where you know each other, but you still, I mean, I think the stakeholders are still very careful that none of the client information has sort of been leaked out. I think unless this problem is really totally solved, so I think we'll hold back a lot of this application to be live.
Okay, thank you, Lawrence. May I first quickly ask you, like, as the president of a Hong Kong Blockchain Society, where do you see the position of Hong Kong? And then after, I will come back to like individual sectors such as the banking and the HKEX position in blockchain.
Okay, I think Hong Kong. Okay, I think really to realize to play a role in this, I think you see many sort of people are sort of competing over. But I think in blockchain you have to work together. I think collaboration is very important. So I think Hong Kong should really use its strength in the sense that Hong Kong may not be the place where you have a lot of technical engineers. Like China may have all those, but Hong Kong do have a lot of the very good legal structure. So I think it should sort of work with some other neighboring country, maybe the one to push the best practice to set up standard. I think that is important. I think to Hong Kong to play a big role in this ecosystem.
Thank you. Can I quickly turn to Josh? Like, at HSBC, HSBC is the largest bank in Hong Kong, and like, can you share your experience in terms of like how the technology of blockchain can be used in trade and trade finance, that kind of area, apart from like just transferring money?
Yeah, no, absolutely. So obviously HSBC is a huge presence in Hong Kong, but also around the world, and we're also one of the world's largest sort of trade finance banks. So this is actually where we see some of the early adoption of this technology because the problem is so well suited to the technology. Digitization of international trade is not a new topic. People have been trying to digitize international trade for a while, which is good in a way because you know there's a real problem to solve, and it's always good when you know you have a very clear problem to solve when you're looking at some sort of new technology like this. What we've lacked, though, is the ability to work together. The international trade scene is very wide. There's lots of different industries involved. There's lots of players. To do one trade between here and say, the US, it could involve a whole number of parties and a stack of documents like this tall. And that process can't really stay, and those parties need a way to connect. And there wasn't a way for these parties to connect before. You could find a private system, but then everyone would have to adopt a private system, and that has its challenges. Or everyone would more likely use their own system, but then their own system only connects just two parties. So everyone reverts to the lowest common denominator of communication, which is fax machines, emails, and paper and courier packages flying around the world.
Yep.
So what we're going to do is we're going to use this technology to build international trade networks. We're going to do it in an open way. We're not doing any projects that are sort of HSBC alone using blockchain. We're looking at building collaboration. We're looking at building consortiums where we can actually meet this need and create the beginnings of what can be a global trade network. And that's really our focus. I think if we can get the network right, there's going to be a tremendous amount of opportunity for process efficiency and new applications we can launch on that network.
Sure. Do you mind to share a bit, like, in terms of how do you invite your competitors to join your network?
Yeah, sure. So there's a couple different ways, and we're not involved in one project. It's too early to sort of put all of your eggs in one basket, so to speak. But we don't always invite our competitors. Our competitors work with us. Sometimes they invite us. Sometimes we invite them. Or here in Hong Kong, it's very easy. We have our friends at the HKMA to say, we're going to do a blockchain project on trade. You 7 banks show up to our offices on Monday morning, and then we do. And they say, you're all going to work together, and we're going to solve this. And that's actually been a very good experience as well. There's also been sort of leading companies that have brought together various financial institutions. So, we're obviously a part of R3, which is this fintech company that started in the U.S. It's expanded globally. They have over 100 banks that have sort of signed up to say, let's look at solving this problem together and develop their own technology. So we're also working with them. And they're also going to work just as banks. So we have some consortiums where they'll just form a joint venture as banks. They'll appoint a technology vendor. They'll form a new sort of not-for-profit joint venture to manage it. And then they all sort of can share the proceeds. It's a common problem. So we need to start looking for a common solution.
Sure. Can I quickly turn to Angelina? Like at HKEX, what's the adoption of blockchain innovation, and what will be the role of intermediaries given the disruption of blockchain technology? Would that like wipe out a lot of jobs of custodian banks, and how's the prospect looking in terms of the blockchain adoption, and how does it impact job and in the financial markets?
Clearing and settlement are probably the best things to actually use a blockchain technology. So if you look at what Douglas was saying in terms of what is blockchain and distributed ledger, it's 2 parties actually passing information to each other in a secure way. So if you put that into the clearing and settlement front in terms of you've done the trade, and then on T+2, money passes and script passes, blockchain or the use of distributed ledger is actually theoretically a really good way of a secure method that can actually be scalable. So in terms of what exchanges have been doing, you're just seeing one exchange after another. So Japan, JPX, KRX, Deutsche Börse, all of these exchanges have already started announcing some type of blockchain or some type of distributed ledger technology for the low transaction or low volumes to actually start testing it and seeing how they would gain acceptance. On December 7th of last year, that was pretty much a seminal moment because ASX, their regulators approved it, and ASX actually announced that they were going to replace CHES, their clearing and settlement system, with a fully blockchain system created by Digital Asset Holdings. So in terms of, if you look at CHES and if you look at this new system, it's going to be open, it's going to be scalable. So I can see an ecosystem that all the chains would be linked in together. And will there be changes or job losses? No. I think there will be a lot more opportunities that exchange participants can log in, share registrars can log in, custodian banks can log in. So the system that you're building will actually just fit in quite well with an exchange system. And I think that's one of the things that's most exciting about blockchain, that it can be scalable, it's secure, and if it's actually designed properly, people can actually link into it and become exchange members or something like that. So it's going to be interesting to see as ASX takes out their prototype model and then rolls it out. Now, in relation to HKEX, we're definitely looking at options, and we're in discussions with various providers. How will we replace a system that has 99% settlement efficiency for the future? That's the question right now. We're looking at that strategy. We're looking at what we want to do next. But this is one of the technologies that definitely, to be able to link in with NASDAQ, to be able to link in with different exchanges and different custodial banks, as well as financial institutions. So the area of being open, scalable, is probably the buzzword of the future. So I don't think it's going to change jobs. I don't think it's going to make jobs go away. I think it's going to make more opportunities out there for financial services providers, and people should be on top of this. So that's my humble view.
Thank you. Thank you. Can I quickly turn to Paul? Like, Paul, you have a lot of experience in China, and can you share your experience? What do you see happening in China? You have experience not just in the financial sector, but also in agricultural and other oil sectors. Yes. So perhaps you can share some of your experience in terms of the adoption of blockchain
Sure.
Apart from just financial services.
Sure, thanks. So yes, I thought my career will stay with the financial services, but now I'm raising cattle and planting crops and all that. So because our team actually cover the region, we have seen two major developments. One is a lot of blockchain platform is being deployed for cross-industry collaborations. So manufacturers are working with leasing companies. We have shipping companies working with insurance companies. That is one part of the demand in the market for the technology. The other one is the so-called immutable and authentic record in the blockchain that allows traceability. So in China, there are a lot of counterfeit products. Actually, counterfeit products everywhere in developing countries. Like 80% of the products in the market are fake. So there's a big need to use blockchain. I have seen a brand, a company that sells brand beverage. With blockchain, they actually chase out, they actually increase their revenue 5 times in 3 years, just because they kick out all the counterfeit products. So it's a very powerful technology in China and in developing countries. There are also a need to facilitate financial inclusion, and blockchain is a low-cost technology that allows microfinancing, microinsurance. So we are also seeing the development in these areas. And in China, particularly, they form different kind of alliances and societies, and it's a little bit different from the Hong Kong societies because the Hong Kong ones are more on educating the ecosystem, putting pressures on regulators, and maybe facilitating the industry to adopt the technology. In China, these alliances or society, they are more focusing on developing new DLT platforms. So they think the Hyperledger is not fast enough. They want a Hyperledger. So they are spending a lot of time in those areas. They also form alliances around certain industry like financial ecosystem with banks, insurance, brokerage, etc. So these are some of the interesting development in China.
Thank you. Regulation is always a key component in terms of innovation and blockchain technology. So I'll move to Doug. How do you see the regulatory landscape being developed in Hong Kong or the broader Asia landscape? I guess a lot of cryptocurrencies has banned in Korea, in China as well. But Japan seems to be pretty receptive to cryptocurrencies. So perhaps you can share some of your insight into the latest regulatory landscape in the region. Thank you.
Let me come at this from 2 different directions. One from some of the legal challenges, and the second from some of the regulatory issues. And I think on the regulatory side, one of the biggest issues at the moment is all of the noise around cryptocurrencies, ICOs, and the very real risk that regulators in a pretty substantial number of jurisdictions will end up taking approaches that more or less cover everything, as opposed to taking differentiated approaches depending upon which context the technology is being used for. So if you want to think of a differentiated approach, think of China. At the moment, mainland China, if we look at cryptocurrencies, we look at blockchain, we look at ICOs, blockchain is a national strategy, a national priority. If we look at cryptocurrencies, we can look at non-sovereign cryptocurrencies, where effectively they're almost banned at this point, and sovereign cryptocurrencies, where the People's Bank of China is actually running advanced pilots in launching its own sovereign cryptocurrency. So what you can see is a differentiated approach, but other regulators are sort of lumping everything together, and I think there's some real risks at this point in time. From the standpoint of some of the legal issues that we're seeing, I think these are very important for where we are at the moment. If we look at the core strengths of blockchain, it is really security, transparency, immutability. But the thing is, these strengths, from a legal standpoint, are also some of its biggest challenges. There's often a view in certain parts of the community that blockchain gets you out of the legal system. And the reality is that it doesn't. It pretty much exposes you to the legal system everywhere. And as we see some of the losses mounting in some of the crypto and ICO world, we're going to see some of those things play out in a context that perhaps wouldn't have been ideal. But if we think of security, not every blockchain is built the same. Some blockchains are very secure, others not so much, and a real need, I think, for further progress, particularly in the sort of ICO certification process that is taking place. The second, in the context of transparency. Transparency we often think of as a very good thing, but for all of you who have been spending time dealing with data protection, data privacy, and in particular the implications of the GDPR coming out of the EU, blockchain raises some very big challenges in the context of both privacy as well as the immutability. And immutability raises real questions from the standpoint of both garbage in, garbage out problems, as well as correcting errors. And these are things that basically mean, in many cases, the technology is not the answer to every problem. So I think if we look at ASX, ASX is looking at it from the standpoint of clearing and settlement, which is a little bit slower, but not from trading, because the characteristics that make blockchain attractive also make it less suitable for very high speed, very high volume transactions. So, from a legal and regulatory standpoint, on the legal side, we're actually probably spending more time dealing with some of these structural contracting issues and consortiums than on the technology today. And from the regulatory side, definitely an increasing number of jurisdictions that have a high level of understanding and awareness, but quite a lot of jurisdictions where some of the noise is bringing real risks.
Okay, sorry, Angelina, you have anything to add?
I would agree with everything that Douglas has said. And it's interesting because in Asia, most of the regulators treat, for example, Bitcoin, they treat it as a currency, which is why in Hong Kong it's actually not legal in tender. Whereas I had the CFTC head of international, Eric Pan, in front of me, and he said, you know, we treat it as a commodity in the US. We're going to allow CBOE and the Merck to trade this. And I said, well, how can you do that? You don't even know if Satoshi actually existed and this actually is actually being generated. He says, we don't care. It's a commodity. We're going to allow it to be traded. So they have taken they've just underlined it and just said this is a commodity. Whereas for us in Hong Kong and for the rest of Asia, they have treated it as a currency and therefore want to protect investors until it can be proven that it is a currency. So the difference in treatment and regulation is quite interesting, Western versus Asian / the rest of the world. And I think as we understand more and as the West develops and maybe influences us, we may see a sea change. But there are no pure regulations on what is required for a blockchain system, for example. Not yet. The regulators have not gotten around it. What you've probably met Shupui today. He probably spoke about the HKMA sandbox. The SFC has actually talked about their sandbox. So regulators are looking and examining it, and in fact, they want it in their backyard so that they can watch it even closer as it develops. So I think you're going to see cautiousness, as Douglas has said. But whereas on the Western side, in the US especially, UK is sort of in the middle if you look at where they're going. But in the US, it's now traded, and that's why Bitcoin went up to $20,000 a Bitcoin. And now it's back down to 6. So let's see what happens on that.
Okay, thank you. George, like HSBC is definitely one of the most important global financial institutions. Can you share like what's the HSBC position in terms of like Bitcoin or like how do they see the development of cryptocurrencies?
I can share my view. I won't share
Yeah.
HSBC's view, but in terms of my view, they're very different worlds. You know, as we talked in the beginning, there's this real divergence of the two technologies, and we're very, very interested in what we can use this technology to deliver a better customer experience and to deliver more international trade for our customers and for the planet. Now, cryptocurrencies are a different thing. And actually, I don't own any cryptocurrencies. I haven't checked the price. I don't know anything about cryptocurrencies except for the underlying technology, which I find to be fascinating in terms of its other applications. So I don't have an official position on crypto. It's one of these things that is interesting to read about, but it's not something that I'm interested in so much. It's a different use case that I'm looking at.
What about like smart contracts? Like in simple terms, like what smart contract is basically a distributed ledger to store contracts. Like, do you HSBC or HKEX or Douglas or any of you have any opinion on like smart contracts?
Sure. I think smart contracts are fascinating. I think it's clear to sort of point out, and I'm sure you would do the same, that it's not actually a contract. You know, it isn't a legal instrument. It's
it's a digital contract.
It's
basically
a way of driving automation in a process.
Okay.
There's an old joke that they're neither smart nor contracts.
Yes.
Yeah. And I almost see it as sort of not the priority. I see it as something that'll come afterwards. Because if I want to enter into a bunch of contracts, the first question I'm going to have is, who do I want to enter into a contract with? And that counterparty needs to be on this network for us to even think about having a contract. So how are these counterparties going to be able to identify each other and actually enter into a contract to begin with? That's step number one, and that's a big enough challenge, but that's really what we're working on. After that, you know, there's a whole suite of different ways that you could automate processes using quote-unquote smart contracts, and I think that's going to be a really exciting phase of blockchain development. Probably not phase 1, but it'll be phase 2 and phase 3, and you do need to have, you know, the quote-unquote killer app to build that network, and that's what we're looking at right now as well in terms of, you know, what is this first smart contract we're going to have. But I think once you get the networks up and running, there's going to be a complete proliferation of this, and you'll see fintechs launching all sorts of really cool solutions.
Sure. Can I ask like Lawrence or...
Yeah, maybe I'll add a little bit on this. I mean, people call dApps decentralized applications as opposed to apps. So actually to have this, okay, smart contract is only part of it. You still have the network. You still have what you call business flow, right? So you know, okay, you flow from, okay, let's say you go from step 1, step 2, step 3, step 4. Also, you have to define all the state, okay, who are the people there? Also, can we identify them? I mean, are they really say they are who they say are? Can we authenticate them? Also, the smart contract is basically a piece of code. Why don't we call it code? I think the smart contract has a little bit more to it because every time you use it, people actually digitally sign it so that they are responsible for it. But it's just a code that embeds some kind of business logic, okay? But that is only part of it, of the whole so-called decentralized application.
Paul, do you have any?
Sure. So I totally agree that contract is really a bad term, and also even the ledger is a bad term because as one of the big four consultant, I always got this question: how is it going to automate the general ledger? So anyway, it is what it is now. The smart contract has, I would treat it like a distributed store procedure if distributed ledger is a database. And these programs have some challenge because they are written in very native languages. And if we embed a lot of business logic in these smart contracts, what happens is when a DLT platform is upgraded, for example, from Fabric 1 to 2 or to 1.1 in the future, there will be compatibility issues, and you may need to invest again to migrate these codes. If your partner or other participants in the ecosystem trying to use another technology, like one is using Corda, one is using Hyperledger, again, there is compatibility issue. So nowadays when we do project, we tend to, if possible, move those logic out from the smart contract and put it back into the application layer, written in more open source kind of codes. So this is, from an implementation perspective, that's how we are treating smart contract.
I might give a bit of a corporate perspective as well, and it'll lead to a question for you, Doug. So I was speaking to a client, and they were an exporter of an agricultural product, and I was saying, oh, this is how it's going to work. To connect with your buyer, and it'll all be internet-connected devices, and as soon as the goods have almost reached the port of delivery, and there's temperature devices, and it hasn't gone above a certain amount, you'll automatically be paid through some smart contract, which of course is going to have huge legal implications. Because he's like, well, wait a second, so if it crosses the equator and it goes 0.1 of a degree over some false, sort of barrier that's been created in the smart contract, does that mean I don't get paid? Because we've been doing this route for a long time, and obviously the goods arrive, and they've been seemed to be, of quality, and they get paid. So, adding a smart contract, it's not going to be this uniform adoption. Some people may not want all of these things to be automated for good reason. I think it'll pose a lot of legal challenges in saying how much strength do we want to put on these automated smart contracts.
Yeah, I think that's exactly right. And from a legal standpoint, there are a whole range of challenges, particularly if you move from the sort of professional parties on either side to dealing with retail customers on the other. Lots of contexts make this very complicated. From the standpoint of the legal profession, a massive challenge from the human resources standpoint to have people who are able to not only deal with the legal issues, but understand how the coding process works so that they are able to basically opine on both sides. That is a huge challenge. And of course, from the standpoint of system design, this is where the more complex, the more variables there are in the environment that you're trying to deal with, the more complicated it gets. And this is, from that permanent standpoint, one of the problems, that much of the legal system is about changing things that have happened from a legal standpoint. And so this means that in thinking about where we embed automated activities, that we have to think very carefully about the different points involved.
And just to add on to that, from Douglas's base, in terms of from the legal side, if you add on the regulatory side where there's investor protection, fairness in the markets, and then just going back to making sure of legality, the regulators would have to go through and make sure that they understood what the contract was, who were the parties, and they would have to be definitely at least, what's the word called? That it would actually happen, that both sides would actually do what they're saying. So for us, we go through a very long, arduous process. For each product or service that we launch, the regulator will ask a number of questions, and we have to keep them happy in terms of showing the legality, showing how the contracts will work. So in the securities area, even this distributed ledger, if we actually do implement it, we will have to go through a number of tests and things like that to run it through. And that's why ASIC, by doing this for ASX, that's a real watershed in terms of accepting distributed ledger as the clearing system for Australia going forward. That's a big, momentous thing. So smart contracts, not on the cards yet for us in the securities industry or in the future side.
Should we start? I guess a lot of of this kind of technology requires some sort of trust issue. As as the largest security house, as the largest exchange operator in Hong Kong, so how do you gain trust from your customers? Do you start by providing the service to maybe just the professional investor first or the professional security house first?
We would start with consultation processes. So we would get groups and groups of HSBCs of the world. So we'd get institutional investors in, we'd get retail investors in, and talk to them and see what their needs are. From there, we may come up with some type of prototype, which is what Digital Asset Holdings did for Australia. And then they tested it on some exchange participants as well as different parts of the whole securities industry. So fund managers looked at it, banks looked at it, and different people consulted back. So then from there, at the same time, you'd have discussions with the regulator throughout the whole thing, and they'd probably be there watching it before they would approve the use of it. So there's a lot of gaining trust, explaining it, market consultation before you launch any type of service. And if we were to go through this type of big sea change, there would definitely be a lot of discussions. So we're just launching our next gen project right now where we'll launch a client portal. So much time has been spent in just working with the market and getting their views of what needs to be improved in the clearing and settlement side. So that's an example of what would happen before we launch something like this. ASX took almost 2.5 years before they actually launched this new system by Digital Asset Holdings. So we expect it would be similar if we did something like this. If you started right now, probably 2020 or 2021 if you were able to get it together for any exchange. So it's a lot of consultation, a lot of market buy-in before you could actually launch this.
For financial market participants, do they normally utilize their in-house technology or they adopt third-party technology? Which way is better?
I used to work for a financial services provider, so we would buy systems off the shelf. So if Fidessa, for example, which was our trading system, if they were to use a distributed ledger, if they were able to get it past all their users and offer it, financial services providers would definitely use something like a Fidessa trading system or an Ayers trading system. But it can't be too advanced that it doesn't match with the exchange. It has to be compatible. And that's where I think Thomson Reuters and all these different providers are thinking about what's the next phase and how do I actually put together products for my market participants? How do I anticipate? And part of that, from an exchange point of view, is to be able to work with these product providers like Ayers, like Fidessa, NICE, Actimize, all of these systems providers to get on the same train and to be compatible.
Right. What about for Deloitte and HSBC?
That's what Deloitte does to help these people.
Go ahead.
I need to think. So
What was the question again, sorry?
Do you use your in-house or third-party service provider?
Yeah, sure. I think it's going to take a lot of work from both in-house and external, to be honest. There's going to be things that we're going to do very well internally, like understanding our own back office systems, et cetera, that we wouldn't necessarily want to outsource to a vendor. But we definitely want to work with third parties who are sort of more on the cutting edge of what's happening with these latest technologies. So it's going to be a combination. But I think we're definitely going to be using sort of a combination of outside and internal. And you also have to remember that because these are consortium projects, it's not just something that HSBC would enter into, it's something that the consortium would want to do to mutualize the cost. So to do that, it's much, much easier to use a third party to deliver a solution on behalf of that consortium. So I think the bulk of the work will definitely be done external, with some of the integration and connectivity being done inside house.
It's a complexity in some of these consortia that the technology provider is frequently part of the consortia as opposed to being a completely separate sort of service provider.
Yeah, and there's pros and cons to both. One, a lot of times it's really difficult to have 12 banks enter into a contract with a software provider. I feel bad for them sometimes. It's a real big procurement process. So a lot of times this is why it's easier to sometimes create an entity or to have a neutral body that acts on behalf of the consortia to actually go and contract with the vendor to actually go through all that process. But this is all part of building a blockchain solution. 10% of it is the technology, 90% is figuring out how we're going to use it.
For us, it's a bit complicated, this question, because we are both the service provider and also we use the technology from other vendors. So I'm thinking maybe if we are solving a business problem, most of the time we try to start in-house developing a solution for our client first. So to our client is a provider. But then it's because the speed will be faster, we are closer to the industry, and also a lot of technology on blockchain is actually open source. So you don't really need to work with a product provider in order to use blockchain. They also lower the cost for the ecosystem. But then after you complete the proof of concept, prototyping, etc., then you start to need a partner or more solution or product vendors to provide infrastructure, continue to operate that, provide ongoing support. A lot of our clients actually does not have in-house capability to maintain the blockchain. And there are also cases where the participants in the ecosystem cannot agree on a vendor. So they actually go ahead and use different vendors in the same ecosystem, which is perfectly feasible because it's a distributed ledger. So different people can host and node in different infrastructure, use different service provider to maintain the smart contract. That's also okay. So yeah.
I was just going to say, overall, adoption is everything, right?
Yep.
So we're trying to make all of our decisions to make sure that we can reach scale and that we can get adoption. So to do that, we're sort of trying to keep the cost as low as possible, keep the sort of as much open source as we can. It's going to make it a lot easier to sort of grow that network. It's an ecosystem play.
I guess it's an open-end question for all the panelists. What do you see the prospect of blockchain in the next 5 years? Yeah. Can I start with Angelina first?
As I said, I can only see it growing. And as the various exchanges actually work on their blockchain activities, I think everybody has in the back of their mind a blueprint that they will be more scalable and eventually open themselves up to connectivity between exchanges. The problem that you have is the nationality and the national interests. So you saw Australia and Singapore fail their merger. It's that type of thing that will stop them actually truly merging together. But what you will see is there'll be connectivity where you can maybe send securities back and forth if they're dually listed. The options are limitless in terms of having a scalable and connected systems, working with DTCC. So our clearinghouse working with DTCC and London Clearinghouse, you can see the scalability there and possibly even with margins and sharing margins and how do you move the money around if you're a global entity. If you're a retail investor, the connectivity to be able to, you can already trade if you're with Schwab or any retail brokerage firm, you can trade anywhere through HSBC around the world. But if you had a system that was perhaps through an HSBC, you could actually do that and see it actually happening in the blockchains around the world. So in the next 5 years, the sky's the limit in terms of growth. It's what happens and how do we have the security that doesn't stop it.
So
and
we
how do
will
we
see
make
more
sure?
free flow of capital around the world.
Hopefully. But that also brings a lot of issues which regulators may not like. And you're seeing yesterday with a huge free fall in the stock markets. And when America sneezed, we got a cold over here. And today we're back up again because America's up again. So it's how the regulators feel comfortable in terms of national interests also.
Okay. Douglas?
I think when we're looking at this, for me, one of the biggest impacts is the sort of excitement around blockchain is allowing us to rethink systems which were often designed 100 or more years ago in the context of that sort of technology. And if you think about the contrast, ASX has gotten global excitement because they are replacing their security settlement system with a blockchain system. Now, if ASX just announced that they were updating their existing security settlement system or the replacement system, that's probably not even local news. And what this says is that by having this excitement, one can go in and get senior level, board level interest in a project that if you did not have that label associated, would largely be seen as a sort of IT infrastructure, not very interesting. And I think the reality is that that offers opportunities, and we're seeing this in trade finance, we're seeing it in the diamond market, we're seeing it in the art market, we're seeing it in securities clearing and settlement, we're seeing it in early stage financing, as a matter of fact. All of these are areas where we developed systems in light of the existing technology, and we've just largely kept using them because we've always been using them. The advent of blockchain is allowing us to rethink many of these systems because it's no longer the technology that's the limitation. And the fact that we can get excited about rebuilding some of these systems to make them work better is where I think the potential long-term real impact lies.
Yeah, no, I completely agree. I think in 5 years, the word blockchain may not be used a lot, but if you're a corporate and you log on to your internet banking portal, you may end up using blockchain because right now you log onto that portal and you can connect to your bank, and then that's about it. And you can ask them to do stuff with you, with other people, but it's really a one-to-one connection. When you log onto your banking portal in 5 years, you're going to see a much, much wider array of services available to you and connectivity available to you than what you have today, and that will be powered by blockchain. But you won't think of it that way. It'll just be, oh, this is how I conduct my business. So it's the remaking of these 100-year-old systems and ways of doing business that'll change. That'll be sort of, quote unquote, powered by blockchain.
Okay.
I also totally agree. I think 5 years later we won't have conference on blockchain anymore, and I probably need to find another job too. so it's just like SSL or Hadoop, any kind of technology. It was quite an excitement, but then very soon it become part of the infrastructure. But from the technology perspective, I think at the moment it's developing towards interoperability because and also the distributed administration of the network. Because at the moment, especially on permission blockchain, the administration, the operator of the network is still very centralized, and that actually defeats the purpose of DLT. So you still cannot let different industry participate in the ecosystem, and every one of them has the right to onboard further participants from their own industry. So this is the limitation of the technology itself. Interoperability also prevent cross-border collaboration because some of the network are actually on different technology standard. So I am aware that there are a lot of people working on these areas. They're trying to find solutions, building bridges, and creating decentralized membership services, etc. So in 3 years' time, these issues will be resolved already.
Can I quickly ask you, how do we resolve those issues in your opinion? How do we get more people in different industry to join this ecosystem?
Okay, this question has two aspects. So from the business perspective, it's actually not hard to get people to join because there are a lot of synergy when cross-industry and cross-border collaboration happens. So we are not that concerned. It's more on the compliance, regulatory constraint, and all that kind of stuff, and data privacy constraint. But then from the technology perspective, when there are sufficient or critical mass of people using one particular standard. Let's say for Diamond, if everyone is using Ethereum, or for trade finance, everyone is using Hyperledger, then people will converge. And then that is one way to solve the problem. Of course, I know people like MIT Idea Lab, they're trying to develop some very high-tech bridge. That's another way.
Lawrence, Hong Kong, or is Hong Kong being the hub of blockchain, or how do you see the prospect in terms of the adoption of blockchain?
I think, as I say, I think for Hong Kong to become a hub, you have to work with the neighboring countries. And I think in 5 years' time, I think right now there's a lot of these things are still on the POC. Not really live. They're very only a handful are probably really alive. But in 5 years' time, I think a lot of them will become. But also, I think the interesting thing is that right now, a lot of the enterprise, they're still looking at DLT permission. But I think the really potential will be on a public blockchain. Just like internet, as opposed to intranet. I mean, you see when you have the internet, that is really the thing that is having seized power. But to have a public blockchain, there's still issues that need to be solved before it can really be adopted. One is, I would say, the identity management issue. I mean, in the permission one, you know exactly who they are, the people, so you do all the KYC, you know who these people are. But in the public blockchain where anyone can join, the identity management, I don't think is really solved. I mean, is this person, he say who he is? I mean, or is he just it's a joke. I mean, in the internet, you don't know whether you're talking to a dog or not. But now the joke is that here you don't know you're talking to a refrigerator pretending to be a dog. It's because of the IoT, people hack into the refrigerator and all these things. So that's one thing. I think the other thing is the privacy issue. I think in a public chain, I mean, you don't where everything can see everything, and that's not, then that you don't have the privacy. I think that is something that need to be addressed. I think people are working on it. For example, it could be some kind of more advanced crypto protocol, something like, for example, zero knowledge proof. But that is still a way to go. I mean, because it's still very inefficient. I mean, it can do something like Zcash, where you can do like transfer money, but you will want to have more complicated transaction. That is still a long way to go. So I think, if those problems solved, I think we can see the public ledger, I think, will be something that will be really driving the growth.
Okay, thank you. We have about like few minutes left. I'm open this floor to the audience. If any of you have a question, please feel free to raise your hand. I will. There's a mic. We can send it over to you. There's a question from Slido, would a community organization like SWIFT or DTCC be better suited to create, operate, and manage a blockchain application since they are trusted parties? There's a question from the audience.
Sure, I'll maybe take that one. So I'd say sure, yeah, that's great. We're definitely in discussions with parties like this to play a role, because the second you create a permission blockchain network, someone has to give the permissions. And that's a perennial problem. So, we talked about it before. How do we distribute that instead of making sure it's sort of not one party that has to do this? Right now, the way it is you have to create an entity, a joint venture, or whatever, and then everyone sort of represents that, and that's the party that provides the permission, and that becomes the new SWIFT, if you will. But if SWIFT themselves wanted to do this, that'd be a great discussion. It would just mean they have to agree to change their business model a bit.
And the answer is yes, they're both working on this. DTCC is working in the credit derivatives context, which is a naturally relatively small but decentralized market on a sort of out-of-date structure. But for centralized securities holdings, it's finding that its existing system is more robust, faster than alternatives. So it's an example that blockchain isn't the answer to everything. SWIFT is very much in the process of trying to reinvent itself, and blockchain is one of the possibilities that is being investigated.
Yeah. Any more questions from the audience? If not, please join me in giving our panel a big applause. Thank you.